Hey everybody, it's me, Gregory Mannarino. How are you today? It is Friday, October 27th, 2017, and I am still here. Even after that video that I did yesterday, my second video where I went kind of off the deep end on Janet Yellen, I was a little nervous that when I got here this morning, my channel would be gone. Well, guess what? I'm still here, and that's all right. And I think it's really all because of you guys and girls that have been giving me an overwhelming amount of thumbs up. So I don't care what YouTube does. I'm going to say, really? I got like 1,000 to 1 ratio with regard to thumbs up to thumbs down. So I don't know what you guys and girls are talking about with regards to my videos getting flagged. Anyway, with that said, very interesting things going on here. But again, this is something I've been going over with you for the past several days. We've seen cash bleed out of the bond market. I told all of you that it was waiting. It was waiting for earnings to come in from big tech, which we got yesterday. As I am doing this video blog, the NASDAQ is up 1.35%. So all of that cash that came out of the bond market is now flooding into tech. This is probably going to continue for a little bit here. We can capitalize on this, and I hope that's exactly what you're doing. What else is going on? The dollar is vaulting higher yet again. Why? Again, because of the European Central Bank promising to ease until there's no tomorrow, hammering the euro, pushing the dollar higher. I don't know where this is going to go, where it's going to turn around. I do know this, and you should know it too. The Fed is not happy about the dollar where it is. It's going to push it lower. President Trump does not want the dollar strong. The Fed does not want the dollar strong. They promised to create inflation. So this phenomenon that we're seeing with the dollar, I think, and I'm not saying to do this now, but we got to keep our eye on this. I think there's going to be a nice opportunity to get short the dollar. And I don't know when, but let's just keep an eye on the dollar there. You can look at ticker UUP if you're interested in that. Now let's talk about the bond market, which you know how important the bond market is. And I know you're watching this in real time right on my website, traderschoice.net. Just real quick, I continue to get questions about that chart. Now, if you look, again, go to my website, right side of the page, under the chat room, you're going to see a nice chart of the total bond market. You can change the timeline, 1 minute, 5 minute, 15 minute, day, week. It seems like some of you are getting confused about that. You know, me personally, I like to look at it on the day-to-day basis, and you can kind of just look at the pattern there. You can see where it's going, and you can also look at the color on the chart, red or green, on the very end to the right, so you can get a handle on what's going on. For example, if you were to go there now, you're going to see it's not doing much of anything. The bond market is just about at the flat line. The U.S. 10-year yield is at 2.44. I think it was 2.46. At the end of the day yesterday. So a tiny fraction of cash may be going back into the bond market here, but nothing that should be opening an eyeball for us. Keep an eye on this. Again, and you can see this, and I've been going over with you how it works, and you've seen it. Cash coming out, waiting for somewhere to go, boom, going into the stock market, and that's why the stock market always lags behind what the bond market is doing. And you can capitalize on this to the nth degree. And rip its freaking face off. It's that simple. Whether you're a stacker or whether you're a trader, use the bond market to your advantage. Let the bond market tell you what's going to happen. It's really not that hard. Metals are under pressure right now. Not too much, but still, because the dollar has been ripping higher on the back of the ECB. Practically melting down the euro. That currency war I spoke about yesterday is going to heat up. There's no doubt about it. So let's just summarize real quick. Again, the cash that came out of the bond market is now making its way into big tech. We're going to hear from Apple soon. That might push this higher. We're going to talk later in my second video when I watch the action today. I'm going to try to make a prediction of what we're going to see next week in this market. And again, I'll go over that in my post-market wrap-up. So again, watch the bond market. Right now, it's not doing anything. It's kind of at the flat line. Dollar strength is going to turn into dollar weakness at one point. We might want to get short that. I'll talk about it at that time. Use this time to your advantage again. If you're a stacker, you should be adding to your stacks. Look, I don't care what other individuals on YouTube are trying to tell you, and I know you get it. Central banks, just like the ECB just said the other day, they're going to continue to inflate into oblivion. That means you need to take the opposite side of that trade and hold a hard asset. Become your own central bank. Bet against the debt. It could not be more simple. There are a lot of people out here who do not have the foresight to understand this basic concept to bet against the debt. It's in the biggest bubble the world has ever seen. And it's not just Greg Mannarino saying this anymore. It's multi-billion-dollar fund managers who keep coming out, joining the chorus, sounding exactly like Greg Mannarino, sounding exactly like Alan Greenspan, former Fed chair, who said the debt's in a bubble. So, and the dollar is part of that bubble. All right, so that's where we're at here with regard to all that. So you can have all these people saying they're dollar bulls right now. Meanwhile, the dollar's been in a downward trajectory since December. They won't tell you that. They just are telling you what's going on now, like this is going to continue into infinity, which it will not. The Fed is going to make sure that doesn't happen. All right, now before I go off deep and get myself another demerit from YouTube, I'm going to close this video. I do appreciate those thumbs up. Keep them coming. So again, if I get in trouble with YouTube, I can use this as ammo. And I can't imagine, I just can't understand this whole YouTube phenomenon. They really don't want people out here just telling things like they are. They want you to play the game. And they're playing the game. And I know you get it. Again, I'm going to stop here before I get 2 or 3 demerits. I will see you later at the market close. Watch the bond market. Watch tech right now. Watch the dollar. Watch precious metals right here. And watch the bond market. Super important. I'll see you later. Over and out.